Not every single day trading strategy has to sound like rocket science. You don't need a million different indicators, and you don't need to have a million different ideas and parameters based around a trading strategy. Today, we're going to talk about a 3-minute trading strategy that I think is almost idiot-proof at this point. We're going to dive into it here and talk about how you can simplify your day trading strategies with this simple and easy to follow 3-minute strategy right here in this video. So make sure you guys stay tuned. What's going on, guys? Patrick here, and today we're talking about a very simple 3-minute strategy. The thing about strategies, obviously, is they're never bulletproof, but with this 3-minute strategy, I think it really is simple to kind of overall get an idea of the trend and where you should be entering and if you should be short or you should be long. So let's dive into the chart here and make it really quick and really simple. So here we are looking at the SPY, the SPY chart, which is the overall market, the S&P 500. This strategy can be applied to basically any stock, any cryptocurrency, or really anything that's trading, with candlesticks. And I think it's, again, very, very idiot proof in the idea of how it works. So the first thing we want to look at, I think always, is I'm focused on, is the VWAP, right? Now, the key to this strategy is, number one, identifying the trend and then riding the trend. So how do we find out where we're going to enter, where we're going to exit? What we're looking for here is trend breaks on the 3-minute chart. The reason I like the 3-minute chart is it's a little less choppy than the 1-minute chart, but it's still pretty active in terms of really moving and showing you the price action in that moment. But when I'm really focused on bigger plays, I would look at bigger time frames. That's the cool thing about this strategy as well. You can apply this strategy to 15-minute time frames, an hour time frame, really however you want to do it. If you're a swing trader, you could also apply this to the daily time frame. That's what's so cool about it. I don't think it's, again, this is not a strategy that I invented by any means. But what we want to do here, we're going to pull up the 3-minute chart. Now, this is kind of a little different part of this strategy here because this is more of a bear flag to the downside. But you can see the key here with all of these entries and exits when you're trading this strategy is we want to look for a trend to break, a trend break, or a support to break, right? So you can see the market sold off. We bounced in this bear flag here, and then we broke the downside. So right there, that's our entry, right? So this is our entry when we broke to the downside, and then we rallied all the way, and then we sold all the way down here. So we touched multiple times support. We had that overall flag. We had that overall flag formation, and then we got the trend break, that trend being that flag, and then we broke to the downside. So what we want to look for next, let's say, okay, we entered this, we got short, and then we took profit down here at 385. It's beautiful. Now, again, we had a little trend, boom, 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 popping up, and then guess what? We broke through that trend there, and we sold off again. So you could have entered here on this trade. It kind of went sideways for a minute. Again, we're looking to draw lines on the chart for multiple touches. We want to see these candles touching multiple times. So we had this touch, and then the break to the downside from the 387s down to 386. Now, let's keep going. Here we go. This is another good little opportunity. This is kind of the bigger trend here. And guess what? We broke out here, right, to the upside. So what do? Well, we could get long right here as we push to the upside and then rally up to 383. Again, we pulled back. We can go like this. Look at, identify that trend. Beautiful. Again, guess what we could do? We can identify this trend. Multiple touches. Ding, 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 ding. Multiple touches. And then the move down. And again, we pop up. So pretty much, you can literally just draw the line on every single little trend. And then we look to trade when the trend breaks. Again, right there, breaking the downside. And then we sell off. We follow that trend lower. And then we break to the upside. You can see this move here. Look how this one ended up working out. You can see just by basically identifying, ding, 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 multiple touches to the downside. And then guess what? We broke through that trend and we pushed higher. So then from here, we got multiple touches on this trend. So we were riding this trend higher, ding, 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 and pushing higher. So that's the, really the overall idea. All we're doing is just identifying these trends and then drawing lines on the chart and looking for those areas to enter based on those trends to break. The thing is here, we want to make sure that we're trading the trending market. We don't want to be trading, a totally sideways market. Like on this move here, like I would say on Thursday, you can see on Thursday, the market really was just going sideways for most of the day. You could have, traded these little pops and drops, same idea. If you go in here and you zoom in, same idea here, like having this trend like this. But again, it wasn't very clean price action. Like you can see this overall trend here, not super clean price action. So we're really looking for overall a trending market. When the market's trending, that's when we want to be trading. We had this break to the downside, the gap down. So obviously we had that little trend right there. There was that pre-market action as well. But you can see the break to the downside here. And if you really, wanted to get crazy and focus on this setup here, you could have basically created that bear flag. And then there's your entry when we broke that trend. It sounds crazy. It does sound crazy. But what this is allowing us to do is, number one, have patience because we're waiting for a trend to break. Either we're not in the trade because we're waiting, we already took profit, or maybe we got out for a loss, or we're just waiting for the next setup. We're just constantly waiting for these trends to break. Same idea here. You get the break to the upside, and then boom, we're entering long there. This move to the downside, and then guess what we got? The break to the upside. I think what this really does is it forces you to, number one, be patient. It forces you to wait for that setup, and then it forces you to look for only the best opportunities. Now, obviously, you're not going to guarantee that you're going to make millions and millions of dollars here trading this trade. But what it's doing is it's giving you reasons to why you should enter, or giving you reasons to why you should not enter. Just because the market's bouncing around, kind of trending and doing, not what we want it to do for that setup, that basically tells us like, hey, look, we got to be patient. We got to wait for this to form. We got to wait for this opportunity. We got to wait for this trend to break. The trend breaking is our indicator to enter. And then number one, like I said, if we're below the VWAP, we know we're probably bearish. And if we're above the VWAP, we know that we're probably bullish in the overall trend with the market moving at that time. Does that mean, AMC is going to be bullish forever? No. Let's say end of day on Friday, you wanted to get long, you're looking for opportunity. Well, there you go. Boom. We're forming ding, 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 touch, touch, touch. And then we break through that trend right there. Right through that trend, breaking through there, and boom, up to the $138 level. I don't know how much easier I can make this seem, but it's very, very simple in that idea that all we're doing is looking for the trend to break, right? We're entering a trade when a trend that has multiple touches breaks, and then we're following that trend as well. But in general, these are our entries. We're looking for entries based off of these trends breaking. Here, very solid trend to the downside, right? Trending lower, and then we get that pop back up. We can enter long here. It obviously didn't rally up too big, but again, where are we at? We're way below the VWAP here. We're sell, sell, sell. The overall trend is sell, sell, sell. So these are things to think about. We're thinking about the overall trend. We're thinking about where we're at with the VWAP, but then we're looking to enter the trade when we break through the trend line on this 3-minute chart. This is, I would say, more of a scalping strategy, but you could also kind of ride momentum as well. If the momentum is there, if the market's, really trending lower or trending higher, there's going to be opportunities to really capitalize. You could trade this on a bigger time frame. If you go to the 15-minute chart, same idea. If we're at the 15-minute chart here, these trends will pretty much be similar in the sense, but you're going to get less touches. On the 3-minute chart, you're going to get more of those candles, touching the overall trend line. And then you get that overall setup and you get that move that we're looking for. So pretty simple idea here. We're just waiting for the opportunity. We're waiting for that trend to break. So there it is. Like I said, don't overcomplicate things. If you're trading the trend, you're trading the breakout. So like I said, don't overcomplicate things. This is a very simple strategy. We're, number one, identifying, are we below the VWAP or above the VWAP? And then we're just looking for an entry based on a very simple premise. When a trend breaks. What makes a trend? Multiple touches of a overall trend line gives us the trend, and then once we break through that, that's when we enter, either up or down. We don't care either way as long as there's action, my friends. So don't overcomplicate things. Look for opportunity when you have it, and look to make some money here in the stock market. based on just having overall risk reward, having a discipline, and being able to sit here sometimes. That's one of the biggest things, one of the biggest lessons that any trader can learn. You can't spell patience without pay. P-A-Y. Pay. I think so, right? Patience. If you want to get paid in the market, you got to have some patience. And I think this really gives you a good overall risk to reward in terms of your entries, your exits. And then it almost forces you to not overtrade. It forces you to look for those entries based off of one simple idea, and that's a trend breaking. There it is. If you guys haven't already hit that subscribe button, you know what to do. Hit that like button and all the buttons down below, and I'll talk to you guys later on.